card debt, what happens when the credit hits the fan? And what can you do about it? What's going on, y'all? It's your boy Jamal, the credit protector. I help small business owners and investors get access to capital. And right now, what we're dealing with is a credit crunch that everyone is feeling. Share this out. We're going to go over a few different strategies that you can use to help eliminate some credit card debt, get out of credit card debt, some very practical things that anyone can use, especially if you're in a position like so many other investors and entrepreneurs where after the pandemic, you probably have some debt right now and you may be considering bankruptcy. This talk, we're not necessarily going to be focused on bankruptcy. We're going to be talking about different ways that you can kind of start to get yourself out of that debt, perhaps even protect your credit while you're battling high interest rates, etc. This has been a big thing with helping a lot of business owners, especially now. A lot of business owners have high utilization. So if you're a business owner with some high utilization, maybe a card or two got shut down, these are some ways that you can handle that, right? So one of the first things, especially if we're looking at credit card debt, the biggest enemy of credit card debt is compounding interest. We always hear this is the eighth wonder of the world. You can have it work for you. It also works against you. For most of us, if we're dealing with credit cards after that zero interest period, compounding interest is probably working against us, especially if you have, a 20, 25%. I've seen as high as 31% credit cards building up, stacking against you. Now, let's say you're in a situation where you have, let's say, $50,000 worth of credit card debt, and you're not exactly sure what to do or how to handle it. And for whatever reason, let's say you're facing a financial hardship. Maybe business isn't going as well. Maybe the primary income, for whatever reason, their income stopped or dropped. Maybe it cut in half. Each lender, right? Each lender by law has some kind of hardship program. During the pandemic, it was the CARES Act. Now we just have, what's going on, Alicia? Now we just have hardship programs. You can call up your lender, especially if it's a credit card company, and ask them for a hardship program. What type of hardship program do they offer? I recommend you do this before you do any kind of debt consolidation or debt management company. What's going on, Fish Clips? That's a random name, but all right, that's cool. Share this out with others who may be dealing with high interest or credit card debt that they want to get rid of. So before you go to a debt consolidation company, I do not recommend debt consolidation companies because you could typically do this. Oh, a fishing channel. That's pretty cool. That's pretty dope. I haven't gone fishing since I was like a little kid. What you want to do is reach out to your credit card company or your loan or your auto loan company and say, hey, I'm facing a financial hardship. Do you have a hardship program? They'll actually say, yes, we have a hardship program. Let me transfer you over to that department, right? What's going to happen is that they'll calculate, look at your balance, and they'll say, okay, based on, you could tell them what the hardship is. I lost my job. I was sick for 6 months. I'm going through chemo. I can't work as much, whatever. From personal experience, I told them that I had lost my job, right? Especially during that time with Trump furlough. If anyone here is going through that furlough right now, that Elon Musk and Doge and everything, the way they're tearing up government programs, right? So let them know you're going through a hardship. They're going to analyze your balance. Based on that, they're going to say, okay, we can put you, and each company is a little different. Some of them, what they'll do is they'll shut down the account. They'll just outright close the account and say, we'll put you on a 5-year plan. Instead of you paying all of these late fees and you getting hit with 25% interest, what we're going to do is we're going to close the account. We're going to drop your interest to like 4%, and then you just make monthly payments. Yay, finally, finally, finally. They're gonna drop down your interest, and now you just make those monthly payments until it's paid off, until that credit card is paid off, right? Again, this is better than any type of debt consolidation program because you're not getting any late fees, and it's saving you on interest, and it's potentially still allowing you to maintain and keep a good relationship with that bank. Some other hardship programs include, like, let's say with Chase, if you miss a payment with Chase, you don't have to be 30 days late. Even if you're just like 1 day late, but you know you won't be able to make the full minimum payment, you can call them and also speak to their collection department and ask about the hardship program. They're going to give you whatever their stipulations are. Maybe they'll lower your interest rate. Maybe they'll lower your monthly payments for the next 6 months, right? Even Capital One, they have what's called like what do you call it? A redemption program. And you may be wondering, why would the credit card companies do this? Why would they want to do this instead of a debt consolidation company or bankruptcy? Well, the reason they want to do this is because they really do want to keep you as a customer. They rather have you keep you as a customer, keep getting that swipe fee, keep getting the interest, right? Keep getting those monthly payments in and keeping you on the books as an active customer as as opposed to charging off the account or uh, discharging the debt under a bankruptcy. It's a lot more beneficial for them to give you a lower interest rate or more flexible repayment terms than to just lose you as a customer altogether. So, for instance, with Capital One, Chase has this too. They'll have where you can even sometimes settle, right? Let's say before the debt is charged off, they'll say something like, "Hey, we'll put you on a special program to where if you make your next 3 months of payments, we'll take your account out of the negative, make it positive, and give you full use of the account again." Capital One will do this for you, right? One of my clients actually got a letter. They fell behind. They were like 5 months behind on their Capital One credit cards. They were sent a little like notice or thing in the app, and it said, "Hey, instead of you making, a $600 monthly payment, just pay us $200 a month for the next 3 months, and we'll mark your account as current." So they did that. Now the account is reporting current, is no longer reporting late. The next thing that they received is a letter saying, "Okay, great. You've been making your payments, these $200 payments on time for 3 months. If you do this for 3 more months, we'll take your account out of restriction and actually give you full use of the account again." It's like what was it on the letter? They said basically they unrestricted the account. This is one way that they were able to pay down the debt and still keep that access with that bank and start to rebuild and reestablish themselves with that bank. With Citibank, they also have a hardship program to where they'll lower the interest rate all the way down to something like 4% so that you can catch up on your payments, and it reduces your monthly payments. Amex also has a hardship program. It varies to where you can either make lower monthly payments or they'll shut down the account altogether and put you on a 5-year repayment plan. During that 5-year repayment plan, they're not charging you any interest whatsoever. All of these programs are a lot better than going through debt consolidation. They're a lot better than bankruptcy if you can continue to pay them, even if it's a smaller dollar amount, right? If you want to maintain your relationships with these credit card companies, if you want to be able to keep access to these credit limits with these credit card companies, going through a hardship program is a lot better because banks like Amex, Chase, Navy Federal, US Bank, Citibank, once you put them into a bankruptcy or once you charge off an account, there's no coming back. They're not rocking with you. Just count any relationship you had with those banks as gone. Because Chase is not going to give you another account. US Bank won't. Navy will not at all. With Navy, as long as you owe them, they is not giving you any more credit. The best thing you could do with like Navy is pay them people and then pay them people in full, wait 30 to 60 days, and then try to apply for something. But if you include them in a bankruptcy, they're not rocking with you. There's nothing you could do. With Chase, there's nothing you could do, period. Like, they don't care if you pay them off or anything. If you get to charge off status or include them in a bankruptcy, you're fucked. It ain't no coming back from it. So do a hardship program instead before you get to charge off status, before you get to a bankruptcy, right? A couple of telltale signs that you might want to look at a hardship program. Once your overall utilization goes above 50%, right? You're looking at your credit card utilization. You should be tracking your credit card utilization if you're not already. Once you're looking at your credit card utilization and you're over 50% and you can't really figure out a way to go ahead and get that utilization down, and it feels kind of like you have no idea how to get it down, go ahead and reach out about a hardship program. Even if you don't qualify for the hardship program right then and there, they'll still tell you the qualifications. Like Chase will tell you, we don't have any type of hardship program until you miss a payment. Once you miss a payment, then we can discuss a hardship program. Because in their mind, they're like, well, you've been paying this on time. Why would you need a hardship program? But once you miss that payment, and it doesn't have to be 30 days late, you could just be like 5 days late and reach out to them and ask them about the hardship program. Now, the trick to this is even if you're not facing a severe hardship, you still can take advantage of this because they're still able to lower your interest rate or lower your monthly payments so that you can catch up. That's the whole point. The whole point is for you to be able to lighten the load a little bit, catch up on your debts, and maintain positive relationships. Because each one of these relationships with these banks is a six-figure relationship, a multi-million-dollar relationship depending on the bank. Literally, if you're with Amex, that's a 7-figure relationship. You don't want to destroy that relationship. Chase, easily a 6-figure relationship. Same with Navy. Save these relationships. Get into a hardship program. If you had, now let's say you got some cars, some automobiles. Automobiles also have hardship programs. Midnight, where you at? Where you at? Anyway, with the auto loans, right? Some of those hardship programs, they'll do things like they may allow you to move some of the payments or defer the payments for like 2 or 3 months. It typically, the most I've seen is about 3 months where they let you do at least add 3 months to the back end, right? They give you those 90 days of non-payment so you can catch up. Something else when you're looking at, here's a tip with credit unions specifically, what I notice is that, in some background, I've gone through some situations where I definitely misused my credit. I maxed out some cards, right? So some of this is between personal experience and uh, sharing stories from clients, right? Because no one is above it. Everyone's gone through something. With credit unions, they actually have something called payment protection. When you're looking at, when you first sign up for like a loan or credit card, auto loan, mortgage, in the paperwork, always read your terms and conditions. But in the paperwork, they'll even ask you, hey, do you want to sign up for payment protection? Just in case you get sick, you get laid off, or you're seriously injured, will actually cover up to 6 months of your monthly payment for this product. I highly recommend you get that, especially in certain situations. If you know you are prone to getting hurt or sick, or you have a dangerous job to where you might get hurt, I recommend it's a great idea to get it. I'm not saying this is financial advice, but it's kind of like financial advice. Like all insurance seems like you don't need it until you need it. Everything is good until it's not. So get that payment protection insurance. You can also get this um, on any, typically when I apply with credit unions, they offer it on any loan that I get. So I know if I'm laid off, or let's say you're a business owner or you're a 9 to 5 person who's transitioning from being 9 to 5 to being an entrepreneur. With this payment protection, if that kicks in, you know for a fact that your bills are going to be covered for the next 6 months. This means that your credit is protected for the next 6 months. This means you're not hurting your chances of getting funded for the next 6 months. Why? Because all of your payments are actually being covered. One of the biggest things that I'm running into with a lot of my clients is that they had some hardships. These type of things happen. Because of those hardships, they're not in position to get funded. They got to clean up their late payments. They got to clean up their charge-offs. They might be going into a bankruptcy or coming out of a bankruptcy. And now they have to spend the next 6 to 12 months rebuilding before they can get any kind of funding. Something else you want to look at when we're talking about battling compounding interest. If you have, let's say you're at 40% on a credit card and your credit score is still, you're still in the sixes. You're still a 680, 685, 690, a 701. And you have some high interest credit cards. Open up zero interest credit cards and do a balance transfer to those zero interest credit cards. Because right now, your biggest enemy, like we said earlier, is that compounded interest. You want to kill that off ASAP. That's how I was able to pay off $25,000 in like 15 months. I had $25,000 of credit card debt, and at the time, it was like gaining 25% every year, which is insane. I opened up 3 new credit cards with zero interest for 12 to 15 months. I did a balance transfer onto those 3 credit cards, and that's how I was able to pay off the debt with no interest. Yeah, there was a balance transfer fee, but it was only like 3%. I'll pay the 3%. 3% is better than 25% compounding any and every day of the week. Get some zero interest credit cards. Some zero interest credit cards include your Chase Freedom cards. That's the Chase Unlimited or the Chase Freedom Flex. You can also get the Truist Future card, which gives you zero interest for 15 months. You can also get the Citi Diamond Preferred, which is, I think that's like 20 months right now. You'll get 20 months zero interest. You can also get U.S. Bank has a brand new card. I think it's called the U.S. Bank Shield Card, which is 24 months, zero interest. That's the longest running zero interest period on the market right now. No one's doing a full 2 years besides U.S. Bank with the Shield Card. Another zero interest credit card is the Amex Blue cards. So you got the Amex Personal Blue Cash, the Personal Blue Rewards Plus. You on the business side, you got the Amex Business Blue Plus and the Amex Business Blue Cash. All of those are zero interest for 12 months. Who else has zero interest? Almost every major bank has zero interest. Bank of America has zero interest credit cards. Theirs aren't as good. Theirs typically around 9 months of zero interest. If you are a current customer of Bank of America, you might get some better promos. They typically will offer their customers better promos than non-customers because, again, they appreciate that loyalty. They may give you a zero interest for 12 months. They may give you zero interest for 15 months. In your Bank of America app, go to the offers section and it'll show you all your offers that you're pre-approved for in your Bank of America app. It will even tell you what type of zero interest you can get. This is going to be the fastest way to kill off your credit card interest without defaulting, without having to go through bankruptcy, without having to miss any payments. Just move it over to zero interest. You can use the same exact strategy for your business. Another strategy I'm going to help y'all out with when battling high interest, this particular strategy is kind of some secret sauce. So I'm going to share it with y'all on here, right? Because y'all tapped in with me right now, is you can apply for loans, credit cards, and lines of credit that do not show up on your credit report at all. They don't show up on the personal credit. They don't show up on your business credit. Once you apply for these invisible credit lines, we call them ghost credit, you can take the credit that's appearing on your credit card, on your personal credit, that's bringing down your credit score, and transfer it over to these invisible lines of credit and these invisible credit cards. One of them is called M1, the M1 Financial Credit Card. The M1 Financial Credit Card is based on your investment account and it does not report to your personal credit. You got to first open up an M1 investment account, fund it, have it for a couple of months, then you can apply for the credit card. This credit card is great because you get cash back. You can earn deposits into your financial account, and their credit card does not show up on your personal credit. So when you do a balance transfer to this credit card, it literally takes it off of your personal credit and can help zero out that high utilization. Now you can pay off this credit card at will without it showing up on your personal credit, right? So these are some of the tips and tricks that you can use to kind of rebuild your credit and eliminate high interest debt while you're fighting to rebuild and keep yourself in a good situation, right? So if you need any additional help or questions, definitely check out the links in the description of the channel so that you can get that assistance. I help with personal credit, business credit, also different strategies. So also remember to like, subscribe, share this out with people, and I'll see you guys in the next one. Peace.